To some company news now, rolling power cuts and high input prices are giving South Africa's largest food producer, Tiger Brands, a headache. It says it spent over 6 times more on power cut expenses in the 6 months to end March compared to the same period last year, from 12 million rand to 76 million rand. The maker of Jungle Oats, Tastic Rice and Albany Bread reported a double-digit increase in interim revenue of 16% as it passed on escalating input costs, unfortunately, to consumers. But it does say that many customers now with smaller disposable incomes are buying less. We've got the Chief Executive, Noel Doyle, who joins us this afternoon to talk more about these numbers. Thank you very much for your time this afternoon. So your revenue is up at 16%, so you are selling and there is revenue that is coming in. But you've got load shedding, high input costs and a weakening rand. Were these some of the pressures that hit your margins in the reporting period?
Yes, indeed. Thank you. These were the pressures that we faced, coupled with consumer sort of spending patterns changing away from premium brands and out of certain categories. So, for example, in our grocery category, which houses brands like All Gold, Koo, and Mrs. Balls, that total category reflected volume declines, and we were also declining in those categories. And where we grew our volumes was in the less profitable rice and maize segments, for example. So we're certainly seeing consumers making very conscious choices of what they put on the plate, foregoing luxuries, and where they're buying what they would consider to be luxury items, they're looking very carefully at the pricing of those items.
Yeah, let's talk about that, because currently we're sitting at 14.4% food inflation. So as a food producer, where have you seen the biggest points of inflation come through in that value chain? Something that you can communicate to people as to why food prices are at the highs that we're seeing at the moment.
Yeah, I think what we're seeing now is a sort of second season effect of the input costs that the primary producers, that the farmers have had. So we've seen some very significant cost increases in things like tomato paste, where there's been a global shortage. Thai rice prices have been moving upwards, and a lot of our packaging and raw materials, which are linked to international pricing, have also been moving upwards. Where there's been some relief, so for example, in a category like maize, where we've seen a very significant fall off in international prices, that's been offset to a degree by the fact that the rand has depreciated by probably 10% in the last couple of months. So any relief in international pricing has been impacted by the weakness of the rand. We anticipate that we'll see a slowdown in inflation into the second half, but it could still be in Tiger's basket at or above 10%. So down from the current 17, but still probably in double-digit territory.
The load shedding, Noel, something that many businesses are grappling with at the moment. Those related costs went up sixfold. How has this affected your bottom line as well? Because there was a major drive by Tiger Brands to install solar at some of the factories. I'm wondering if this did not help at all.
Yes, it certainly helped. We would be in a much worse position if we weren't able to meet the market demand. And the investment that we've had in the old diesel generators, as well as solar, has definitely been of a huge assistance in ensuring continuity of supply. But as you pointed out, it's come at a cost. And then we've also had the disruption impact of not having full supply of certain raw materials that are inbound to Tiger Brands, and that isn't factored into the number. But I think, we wouldn't want to hide behind the impact of load shedding. It's significant, but it's not the biggest driver. The biggest driver for us is the contraction in consumer spend in real terms as a result of this high level of inflation and the switching that's taken place within categories and away from certain categories that are now used to be on every table and are now considered to be luxury items. So in areas like sauces and condiments, and even canned vegetables, we're seeing, almost 10% volume declines in the total market, not just for Tiger.
Yeah, and I mean, you mentioned this briefly earlier, Noel, but you rely quite a bit on input commodities from overseas. And I'm sure it rattles you as a CEO running the biggest producer in the country when the rand takes a huge nosedive from a diplomatic spat or any other political developments that are being made over the last few weeks.
Yeah, look, it's certainly what's happened over the last few weeks went counter to expectations. I suppose we, as you point out, we are a big trader and importer in those commodities, so we're used to a level of volatility. But I must say that the recent weakness of the rand is something that's taken us a little bit by surprise, and it's been, quite challenging for us. And for the South African consumer, as international prices start to fall, that we're not able to pass that on to the consumer because of the weakness of the currency currently.
Yeah, and a final thought from you, Noel. We've just spoken about the currency, the load shedding, the high inflation, the short to medium term operating outlook for Tiger Brands with all of these challenges, and of course the unexpected decline in the rand, which has unfortunately remained at those low levels of about 19 rand 70 against the US dollar. What do you foresee in the short to medium term when it comes to operating in this environment?
Yeah, so look, I mean, we don't see any let up in the challenges around consumer demand for our product, and so we're going to have to work really hard. We're going to have to go back to the drawing board with our cost base, and even with that, I think it's going to be very difficult for us to repeat the performance that we had in the second half of last year. So quite a challenging period ahead, but we think we've got the right people on board, and we have a healthy balance sheet that will help us to position ourselves for better times ahead.
Thank you very much for those insights. That is Noel Doyle, who's the CEO of Tiger Brands, joining us to talk through their markets, but also the current operating environment and changing consumer buying patterns. With that